Hello and welcome to a special show on India Inc. wish list as the budget 2026 unfold. As Finance Minister Nirmala Sitharaman gets ready to present budget for Modi 3.0 government, India Inc. is laying out its expectations from tax reform and consumption boosters to manufacturing incentives and startup support. Tonight we decode what corporate India really wants, what the government can realistically deliver, and how Budget 2026 could shape growth, jobs, investment in a year where global economy is still finding its footing. Before we connect to our special guest, let's go across to my colleague Prakash Priyadarshi to give a roundup of what is the expectation on the startup front.
Well, in the run-up to the Union Budget 2026-27, the Finance Minister is holding pre-budget meeting with representatives from various sectors. And in this process, she held meeting with representatives from capital market, where several recommendations were made. In fact, a recommendation was made to keep the STT on cash transactions lower compared to derivatives. Along with that, there was a discussion on increasing household savings in equity from existing 5% to 8%. Along with that, it was urged that the buyback tax should not be levied on the total amount, but only on the profit amount. In addition to that, a recommendation was made to impose a short-term dividend tax at the same rate as for NRIs, as at present NRIs are charged 20% tax on short-term gains, whereas domestic investors are taxed up to 42%, and therefore it was requested to address these anomalies going forward. Along with that, the Finance Minister also interacted with the representatives from a startup ecosystem, where they have urged the government for higher allocation of funds for development of a startup ecosystem. Along with that, representatives have also requested government for greater focus on innovation, AI, and deep tech. Along with that, tax relief was also sought for R&D investment.
Prakash, Finance Minister also held a pre-budget meeting with the BFSI sector. Tell us what were the expectations?
Well, the Finance Minister has also interacted with the representatives from banking, insurance, and other financial institutions, where several recommendations were made. In fact, NBFCs have urged the government to provide refinancing window for faster growth in line with national housing banks. It was also requested to reduce minimum loan limit to rupees 1 lakh from existing rupees 20 lakh to invoke SARFAESI Act. In fact, this facility is available to banks at this point of time, and now they have urged the government to extend this facility to NBFCs as well. Along with that, they have also requested to remove DDS on interest income similar to banks, which is a very significant development when it comes to banking sector. Representatives from banking sector have recommended for a similar tax treatment on FDs and mutual funds to improve CASA. In fact, due to higher investment flowing into mutual funds, banks are facing difficulty in maintaining CASA ratio. Therefore, they have urged the Finance Minister for similar tax treatment on FDs and mutual funds. Along with that, they have also requested for higher income deduction after making NPA provisioning, which is fixed at 8.5%. In fact, representatives have urged the government for higher income deduction beyond 8.5% after making NPA provisioning. These are significant recommendations which were made to the Finance Minister. Along with that, she also met with the representatives from manufacturing sector, where it was requested to the Finance Minister to support domestic manufacturing amid global uncertainties and tariff-related disruptions by providing a concessional tax rate and process-related simplification. In fact, it was requested to the Finance Minister to provide concessional tax rate for companies, especially for companies setting up a new manufacturing unit.
Thanks, Prakash, for all those details. And let's connect to our expert panel. We have with us Ved Kumar Jain, past president of ICAI. We also have with us Raman Aggarwal, CEO of FIDC, to speak about the NBFC sector expectations from the budget. And he had a meeting with Finance Minister earlier today. Subhash Agrawal, CMD Globe International Carriers, is also joining. Welcome, gentlemen. I'll come to you, Raman, first. Tell us about the meeting which happened on Wednesday, what transpired, and what were the demands which were submitted by the NBFC sector.
Thank you for having me on the show. So in today's pre-budget meeting, I represented the FIDC, which is the SRO for NBFCs. So we raised four key points. First was, of course, with the NBFC sector now growing and becoming third largest in the world, and Honorable Finance Minister Hassel mentioned in the NBFC symposium that we are today at 25% of bank credit. She gave us a target of 50% of bank credit by 2047. So the sector is poised for growth, and we are leading players in funding of MSMEs and green assets. So there is a need for diversification of our funding sources. As of now, NBFCs are largely dependent on banks, and larger NBFCs borrow from capital markets and overseas. So if there is a refinance window, dedicated refinance window made available, this could help especially large number of small and mid-sized NBFCs who borrow from banks and larger NBFCs. So this would reduce their borrowing cost, which will result in reduction in their lending to these segments. That was the first point. Second point was that today, NBFCs do not have any direct recovery tool. Although SARFAESI Act is applicable, but to enforce security under the SARFAESI Act, there is a threshold limit of 20 lakhs. And whereas, majority of the NBFC loans are retail loans which have a ticket size of less than 20 lakhs. And in the absence of any direct recovery tools, NBFCs are forced to fall back on indirect recovery mechanisms like, filing check bouncing cases, which is further clogging the courts. So we requested if, this threshold limit of 20 lakhs under SARFAESI be brought down to 1 lakh at par with banks. This would do a world of good and give us a direct recovery tool. So that was number two. The third key ask was relating to income tax. Today, the interest income which we have, there is a provision for TDS deduction by non-individual borrowers. Now, this creates a huge operational nightmare. We did some data point collection, and we presented that data from 10 upper layer NBFCs shows that as on 31st March 2025, there were 3.3 lakh borrowers who were deducting TDS. Now imagine such a large segment of borrowers who are small-time businesses. We are increasing a compliance burden for them also, for to deduct TDS, deposit that TDS timely, ensure return filing, which is a compliance burden of these small businesses. And it, on the hand, creates an operational nightmare for NBFCs. And then there are cases where we do not get credit because sometimes the TDS is not deposited in time, or there is a wrong quoting of PAN. As a result, it creates confusion. It is not leading to any extra revenue generation. So the request is to exempt NBFCs under Section 194 from TDS deduction. We are ready to furnish details of such borrowers to the department, but there should be an exemption on TDS. So that was the third ask. The fourth and the final point which we raised was, allowing notifying NBFCs that the borrowers who take education loans, the interest on education loans is a deductible income under Section 80E of the Income Tax Act. Now that is applicable to bank borrowers, but for NBFCs, the provision says that it has to be notified separately. And as on date, only one NBFC has been notified. So we requested if this could be enhanced, this would encourage NBFCs lending for educational loans. So these were the four major asks. Of course, there are three, four other demands which we have submitted in writing in detail.
Right, point taken. So, four key demands submitted by NBFC sector. I want to come to you, Mr. Subhash Agrawal. You had represented capital market side. In fact, you have submitted 10 demands, if I remember correctly. Can you tell me about what was the discussion point with the Finance Minister?
We had a very fantastic meeting. We have given an pre-budget submission in writing earlier, and after that we had a meeting yesterday, and we raised 10 points, and they have nothing said कि they are against those points, but subsequently other speaker also supported our views, and they all said we support the views presented by Mr. Subhash Agrawal from NB. So they have supported our views.
All right, point taken. We'll come to those details. But Mr. Jain, I want to understand from you with the demands which have been submitted by broadly by capital markets as well as banks and NBFCs. Now, these are something which has been mostly repeated year after years. What is your take, and what could government do to, on one side, industry should thrive, and on the other side, consumers should not suffer?
Ankur, see, we must keep in mind that budget is a regular exercise year to year. And all people, stakeholder, which industries, NBFCs, capital market operators, all they have their own views and they give their suggestions. And while preparing a budget, which is a balancing exercise, you have to look at the income and then the expenditure. What are those points which are workable, which can be addressed, they are taken care of. And in case these are repeated points, that does not mean that a point which was raised earlier will not be taken up in the next budget. So as I say, it's a regular systematic exercise which is to be done. And you will see while this budget, if you would divide these suggestions, the budget into, I will say, three buckets. One is, which I normally call ye dil mange more, reduce taxes. This is one normal phenomena of the budget proposals which are sent to the Ministry of Finance for seeking reduction in tax rate, etc. Second are some of the issues which are hitting the particular industries and which need corrections, that those issues are taken up. Like as we can see now, NBFC issues have been raised. Subhash has talked about the capital market, derivative, etc. These suggestions are coming up. With the industry, this particular industry believe and feel that there are teething problems, there are issues which are creating hurdle in the growth, etc., and that need to be addressed. And the third bucket is compliance burden and how to make the ease of doing business, etc. These are the three issues, larger issues. And then there is a larger issue which I will suggest to you is to look at the economy of India, how we can increase what we call the GDP, the per capita GDP income, how we can make the life of the common man more comfortable, etc. Those are some of the issues which are taken up on that issue. Now, if I look at from that perspective, from the first perspective, I believe the chambers have been asking that please widen the tax slabs of the individual. You see, the last year, the budget, a big boost was given, income up to rupees 12 lakh was exempted. But the slabs are 3, 6, 9, 12, 15, 18. And the moment you cross 24 lakh rupees, you are in the highest 30% bracket. So one of the demand is that the highest slab in India tax structure, personal tax structure, individual tax structure comes too early. So it need to be broadened. And this highest slab should come, if not more, somewhere below after the 40 lakh or 50 lakh rupees. That's one of the area which is looking into the one area. Then the second issue is a teething issue, which is a corporate, I believe, is facing is all that some of the amendments which have been made in the recent past, particularly regarding this, what we call shares buyback, etc. Those provisions are, I believe, they have created some imbalances. Those are being looked on. And the third and the most important is how to reduce the compliance burden. That's a major challenge which the industry is facing, with the corporate is facing, with the taxpayer business making. Now, with the digitization, computerization, and integration of, I will say, all financial sector, including GST, income tax, custom, etc., there is a need to integrate all this system and to reduce the compliance burden. The data which is getting captured under GST, there's no need for income tax to have a TDS, tax deduction at source provision, etc. So that need to, compliance burden is the major challenge which I believe it should be addressed, and that I think can be addressed with the digitization happening. So much data being captured, there's no need for asking for people to submit that data again for the purpose. And the fourth, for the promotion of the economy, I will say we are looking India as a substitute capital of manufacturing capital of the world, the second capital of the world. And geopolitical situation is very conducive today for India to become a second manufacturing global capital of the world. And that can happen only when we promote manufacturing in India. And this can happen when we bring back the tax rate of 15%, which we have introduced 4 years back. But of course, later on, this has been withdrawn. Now,
Right.
I could
Right,
I thought
Mr. Jain,
Subhash
point taken. I'll come to you again, but before that, let's go across to Raman. We saw your picture with Finance Minister after becoming SRO. Tell us about the discussion, and now your communication has improved further.
See, I think it would be wrong to say better because to that extent, we do credit to the regulator and the government. They were always open whenever we knocked their doors for any concerns. We have been given that opportunity. Having said that, what this SRO recognition means that we now become the bridge between the regulator and the sector players. So the prime objective here is to ensure enhanced compliance standards and increasing the compliance levels of all the NBFCs and further creating and conducting awareness programs, education levels, upskilling, and also and most importantly data collection. So today we've already started that process, and shortly will be kickstarted doing data collection and reporting to RBI. So the objective here is to act as a bridge between the regulator and the sector players. And yes, obviously, as a SRO status, you become a kind of a formal recognized face for the sector, and any policymaker and the regulator would be more than keen to consult you on a regular basis.
Mr. Subhash, you mentioned about 10 points which were discussed in the meeting. Out of them, could you elaborate? And more importantly, was STT discussed during the meeting?
We have said that STT imposed on cash market transactions since people are doing F&O transactions and options transactions. As cash market turnover is very, very less. To encourage cash market, STT should be removed, and transaction cost of a broker is very, very high, of any investor is very, very high. We have to rationalize transaction cost. So if I will elaborate, that means the FMS said that you will not discuss these points with anyone else. So there is a dharam sankat, you can say, for me. And that market vibrancy we have argued. Reduction in capital gain on listed securities, we have argued on that. Capital, we have said development of capital market development fund. Rationalization of GST, since GST is on 18% on brokerage commission. So services may, if they can consider, so they should rationalize.
All right, so the reduction in STT was part of the discussion with Finance Minister. Mr. Jain, I want to come to you on this. Again, data points have been presented to Finance Minister in the past also, and particularly on F&O, he was mentioning a point that if you want to promote cash market, the STT should be lower. What is your take?
As I said, see, these are the issues with the particular capital market sector. Now, if you go back to the history of STT, why STT was levied? STT was initially levied to capture that tax element which was missing because of the FIIs operating in India, and they're saying that it being a business income, and since they don't have a P in India, so it should not be taxed. And that was the objective of STT. As Subhaji rightly pointed out, now with the derivatives market is a price discovery. Basically, derivatives help because you allow a transaction in particular equity or an instrument or a security with a nominal amount, so that the discovery of price becomes what we call absolutely fair and transparent, as against when a particular security or equity is being dealt in physically on that issue. Now that has become a challenge, that part. Now, in order to promote and in order to ensure that the discovery of the price will not get discovered, that's a good point at STT. And particularly Subhashji talked about of the but for debt sector. So in debt, margin is otherwise very, very nominal. And in order to promote the debt sector, it's very important that the extra cost which goes and which makes the transactions costlier, reducing the volume of the transaction. STTE being that, I think the problem, the capital market operators or like all brokers have taken up this issue with the finance minister, and I believe she will take care in the budget 2026. Yes, this issue need to be addressed.
This issue needs to be addressed. Mr. Subhash, what were the arguments which were given in favor of lowering STT?
You see, we have said that except Korea, nowhere in the world is STD is being imposed, and it is on turnover basis and on higher side. And even in Korea, ultimate cash market doesn't have any transaction cost, only except delivery based. They have the STD, but no other transaction intraday, square up, and all other transactions are exempted except on delivery. Once that transaction converted to delivery, only it attracts only in South Korea, and nowhere in the world STD is being imposed. So this kind of transaction is impacting our impact cost, and other liquidity in shares, long-term investor is being impacted, even short-term, everyone is impacted with this cost. So make rationalize, and since lot of FPIs and NRI and Indian investor, HNI institutions are interested in our market. Our market is very matured and regulated, and to have very high liquidity in the market, we must remove all hurdles. So it is one of the greatest hurdles. We have explained that.
So we heard about issues of capital market, we heard about banking, we heard about NBFCs. Now it's time for insurance sector. My colleague Anurag Shah spoke to Ratnakar Patnaik, MD of LIC, to get a sense of what is the expectation of insurance sector in this budget.
We want to pass on the entire benefit to the customers. We have done so. Similarly, for the agents, the commission rates were rationalized well before the GST amendments, GST modifications came. So we did not touch the agents commission as of now, but such a big organization, we can surely do something which can take care of the whatever we are losing, likely to lose in input, in the form of input tax credit.
Okay, so what can be that, and what would be the quantum of input tax credit?
It is very difficult to quantify now, but I would like to tell you, thanks to Government of India, after the post-GST, the reforms, now the Q3 has been very good for the corporation. We are growing very fast, and hopefully this will help us to end the year with very good growth rates for the corporation.
Okay, so you mean to say that in a whole year, Q3 is going very good, and we have seen that most of your business in month of February and March, we see a huge surge in LIC's business. So you mean to say that in Q4, there will be a big surge in insurance premium because of the GST reforms, and there is no reduction in agents commission?
Yeah, I am hopeful, I am optimistic. There will be good performance in the Q3 as well as in the last quarter of the financial year.
And you will be able to meet all your targets?
I am hopeful.
Mr. Raman Aggarwal, you mentioned that there was one point of discussion regarding reducing the SARFAESI limit. Can you elaborate on that front? What is the issue which NBFCs are facing due to it?
See, basically, as I said, it is logical that, as far as our lending is concerned, the prudential regulations today on lending are at par with banks. For example, the NPA norms. In fact, the ECL provisions have been there for NBFCs since 2018. And for banks, it is only now under discussion, and there is a roadmap laid out. So while on the prudential norms in terms of provisioning, etc., we are at par. In fact, I would use the word reverse arbitrage more than banks. But unfortunately, we do not have access to recovery. So that is something not only illogical, but it also, hampers our recoveries. And as I said, then obviously you have to look for certain other fallback mechanism. And one of the most accepted mechanism is, filing cases of check bouncing under Section 138 of the Negotiable Instruments Act, which is clogging the courts. And recently, Supreme Court made an observation that there is a huge number of cases being filed for check bouncing by banks and financial institutions. So I think this is now having another dimension to it. So I think if that is given, SURFACE Act, it would do a world of good for our recoveries and would also, to my mind, reduce that clogging of courts, for check bouncing cases. So it will facilitate our recoveries and make them more effective. Moreover, it also acts as a deterrent to default. When the borrower also knows that NBFCs are empowered with, taking action recovery procedures under SURFACE, it acts as a deterrent for them.
Right. Mr. Jain, I want to come to you for final word. Just 30 seconds remaining for the show. I want to ask you in brief, what is your expectation in the brief of Budget 2026? What blueprint you can see?
See, the blueprint of 2026, I believe, is not in suspense on this issue. The way the Indian economy is growing, the finance minister has quite a big leverage. But my only hope is that manufacturing sector should be promoted, and that is the only sector which can generate employment. India needs a lot of employment, and our vision to make India 2047, the way the Honorable Prime Minister has worked it out, it can be achieved in the manufacturing sector, and we should try to promote the manufacturing sector by bringing back the tax rate of 15%. Any new corporate setting up any industry in India, the tax rate will be 15%. This will generate a lot of attraction from multinational company shifting their manufacturing base from other part of the world, particularly China, to India.
So these are the words coming in from Mr. Jain, Mr. Aggarwal, as well as Mr. Subhash. Thank you so much for joining at this hour with your views. So definitely, Budget 2026 is keenly awaited for the reforms, for the announcements, and more importantly, for a story of rising with India.